All right, my guest today is Tunku Danny Mudzaffar, the founder of microLEAP. For those of you who don't know, microLEAP is a peer-to-peer financing platform that offers both Shariah-compliant and conventional financing. Thank you very much for being here today, Danny.
Oh, thank you, Kevin. Happy to be here.
So, take me back to the early days. How did you become an entrepreneur in the first place, and how did you land on wanting to launch microLEAP?
Okay, great. So most of my working life, I was an evil banker. I had stints in London and KL where I was part of the trading floor. And what I found was that most of the kind of customers that were helping were big corporates, especially in the financing deals. People who didn't really need the funds. When what I thought was so when I quit my job in 2017, I thought, where am I going to help the kind of people that really need these kind of financing? So I looked at the micro financing space. So your micro enterprises, your mom and pop stores. My favorite example is your makcik in Kuala Pilah that needs 10,000 ringgit. These are the people that were finding it difficult to get bank loans. One, because banks prefer bigger ticket items that make more money. They're not so interested in on the micro side. So I thought that was a space that really needed helping. So I decided maybe I'll do something in microfinancing. And then I did a bit of research and found out that Malaysia was the first country in ASEAN to regulate peer-to-peer financing. So I thought, great, that kind of fits everything together. Crowdsource loans into small businesses. It would be a perfect fit. And not many people were doing that exactly in a Shariah-compliant manner as well. So applied for the license from Securities Commission, and 2019 we were given go live. So we started microLEAP at that time. At first, the Shariah-compliant kind of license wasn't given to us yet because we applied a bit too late and still going back and forth with Securities Commission. So that was October 2019. March of 2020, we got our license to be Shariah-compliant. And that's when we really saw our growth, rocket up. We were growing like 1,000% in terms of funding dispersed in the space of 6 months. And so it showed that people were hungry for kind of Shariah-compliant retail assets, because on our platform with a minimum investment of only 50 ringgit, you can buy an investment note and help a small business get financing. So the Shariah-compliant nature really pushed it up. And I found that it wasn't the borrowers that were pushing the growth in terms of Shariah-compliant financing, because at the end of the day, they don't really care what kind of financing they get because they just want the financing, right? It was more the investors that were pushing our growth, and that was something that was very eye-opening for us. So and it helped that we were,
it was really driven by the investor demand for Shariah-compliant products.
Yeah. And it also helped that we were in the start of the lockdowns. And so Bank Negara Malaysia were cutting interest rates. So people were looking for yield. So instead of, the 3% and went down to 1% that Bank Negara official rates were, we were paying anywhere between 12 to 50% per annum. So that drove a lot of hot money into our platform, which was great for us.
Sure. And the majority of these are short term, right?
Up to 3 years, so kind of medium term. At that time it was pure microfinancing, between majority is 2 to 3 years. And that was great. But we then launched our Invoice Financing product, which is bigger ticket items. So the microfinancing was 1,000 ringgit to 50,000 ringgit. The invoice financing was 50,000 ringgit to 500,000 ringgit. But that was very short term, 3 months and 6 months. And that was something that a lot of the investors wanted, because you always have this balancing act. The investors want short term, the borrowers want long term because it's they pay less per month, right?
Sure.
But having this invoice financing kind of marries the two, because we fit a need of short term financing that a lot of our investors want. So that's really grown our kind of loan size, exponentially.
Okay.
But having said that, we still take care of the microfinancing side. We will never forget them because they're the ones who got us here in the first place. But now it seems that the invoice financing is growing bigger than the microfinancing in our world.
And that's more so driven again by the investor demand, more so than what the borrowers are requesting. Yeah.
Exactly. It's purely investor demand. So that's why we're always looking for investors, because at the end of the day, people always need money. The borrowers will always come to us, but finding that that funding gap to get the investors in has always been our issue.
Yeah, sure. I imagine demand for funding is never something that it's difficult to find people that are requiring borrowing, whereas the supply of capital is the tricky part of the equation. Yeah.
Yeah, very true. Very true.
Okay. So take me back to the very earliest days when you're just getting up and launching. How did you establish? Because correct me if I'm wrong, but I have to imagine that when you're talking about the smaller size loans and the smaller size financing, there's an administrative headache of managing a large number of borrowers, a large number of suppliers. So how did tech fit into solving this part of the equation in order to make it feasible?
Yeah. So we always started off as a fintech platform. That was very key to us. So tech is a very big part of how our platform is made. So in terms of what we did is we automated as much as we could in terms of credit checking. So we built our own credit risk algorithm that takes in feed from our credit bureau, also feed from the manual updating of the application forms and stuff like that, and that comes out with a low, medium to high risk. And so our credit risk officer will just approve it, and then it will go to the next step. So that kind of thing is automated as well, but also in terms of automated for collections. So part of the financing, you always have to collect the funds back, right? So we have automated emails, automated WhatsApp messages, and these are set at certain times before and after due date. So that helps with the collections as well. So that's already been done. So the borrower knows that they have to pay, and then if it needs a nudge from one of our operations guys, then that will be the extra nudge.
Okay, and that's when it may end up taking actual manpower to do it as opposed to the automated process. Yeah.
Correct. Yeah, that's right.
Okay. So when you initially launched, how easy was it to get borrowers on board onto the platform? Was it just basically getting the word out that you existed, and as since there's no shortage of demand, that they just basically came running and looking for funding?
Yeah. So first thing was obviously we are on the Securities Commission website, so that helps to know that we are a regulated and licensed Securities Commission entity for P2P financing, which helps give it trust in the system. But to grow as well, as obviously there's word of mouth, but we also use a lot of digital marketing efforts. So we had a digital marketing agency who we hired, who helped to grow our issuer database, which is the borrowers, but also our investors. So we did a lot of digital marketing through Facebook, Google paid ads, Instagram, YouTube videos, and then have boosts here and there to get at the right target market we want. We used a lot of targeted adverts, so we knew kind of the people that were perfect to get the borrowers on board. So it's funny. First, we were advertising just on the borrowers in the beginning of our journey. As soon as we had a lot more than the investors coming on, we had to switch the targeting to the investors or lenders on the platform. So now it's more the digital advertising is more on the investors or lenders on our platform.
Okay. And is the digital marketing the primary lead source, or how do you actually attract the majority of the investors?
Yeah, so digital marketing is one of them, but we also look at kind of tie-ups with other companies. So it's just like for us to how get to the database. So they will send a electronic digital message, or to their database saying, become a investor on microLEAP, you get XY kind of privileges, etc. So that kind of tie up with other companies, obviously not competitors, but someone who was in kind of a fintech kind of space, who had potential database that we could try to get. So that helps as well.
Okay. And so you started off building the borrower side. You had to pivot back over in order to get enough investors on board. Do you manage any sort of like matching ratio? Like when you get a borrower on board, are you trying to manage towards any sort of like fill rate of what % of the borrowers on your platform actually end up getting filled out?
Yeah, so thankfully all our borrowers actually get filled, which is great. If we do find that they're not getting filled, what we do is they will lower the ask amount, and then we'll send an email out to all investors. This person is low the asking amount. Are you all fine, or do you want to retract your investment? Most are fine, and then eventually it gets filled. So sometimes it's a matter of they're asking too much, and people not liking the investment enough to invest or lend into that amount. But thankfully everything has been fully funded. We don't have a kind of matching percentage that we look at. Basically, we just look and have a feel of what we think will get funded and what won't get funded. And we advise them, look, you're asking too much, just lower the amount. And this is your risk, this is your profit rate. That's something that we come up with. They can't change that. So the profit rate or interest rate is because of our credit rating. Okay. So we go back, so this is what you're likely to get. And more or less it seems to work.
Okay. How did you build out the credit rating in the first place? Because when you're talking about these types of businesses and these types of borrowers, there's not a lot of credit history oftentimes because they don't have the ability to access the traditional channels, let's say.
Yeah. So for the microfinancing side, that's absolutely true. A lot of them don't have a thick credit file. They don't have a credit card. They don't have a bank loan. So what we've done is to input into our credit risk algorithm is we hired a third-party vendor that does psychometric testing. So this micro enterprise will do a 20-question psychometric test. Are you more likely to do A or B? And from their research, this third-party vendor will give us a full report of their own rating and the likelihood that they will pay. So this figure at the end will feed into our credit risk algorithm. And that helps to kind of have an alternative credit risk scoring together with our traditional stuff of, our credit bureau, the number of years they've been involved, the debt service ratio, etc. So we use both alternative and traditional for the micro enterprise, microfinancing.
Okay. And that basically automates the process with the exception of them having to fill out that form, yeah?
Correct, yeah.
Okay. Right. And then that links to what the interest rate is, and that basically is the pre-qualifier in order to get up onto the platform, yeah?
Yeah, it'll be either low, medium, or high risk, and that credit rating is linked to your profit rate.
Okay. And so when you're scaling this up, at what point do you kind of move the needle back and forth, or was the borrower side just upon its own inertia, and that you don't need to market and keep onboarding, that it just kind of keeps on filling now that your name's out there?
Yeah. Now the problem with the borrower side is the quality of borrowers you want. So you get a lot of borrowers who come in, and unfortunately, no matter how much we want to help them, we know that they won't be able to pay us back in 6 months down the line. And it's not us. When I say us, I mean the investors, the lenders, because we're just a platform that matches, right?
Sure.
So now it's the quality of borrowers is our issue. The number of borrowers is fine. I mean, our rejection rate is actually now 60% rejection rate. Okay. In terms of borrowers. So that's steadily been creeping up, because we're just finding the credit quality of a lot of the borrowers are just not that strong enough to be on the platform. So fortunately, we just have to just make sure the right one comes along at the 40% that comes in, which is what we are always, which is challenging for us.
Okay. And is a factor in some of those credit quality is as well play into the duration that they're requesting? The longer the duration, the higher the credit risk, the less it's likely to go through. If they changed it to a smaller amount on, say, 6 month to a year increments, would it does that affect the model?
It does, yeah. So a lot of them, when they come in, especially the microfinancing side, all of them want our maximum tenor, which is 3 years. But we go back and we say, look, 3 years is too much. The investors, it's a bit risky, and the investors are not liking something that long now. We shift it down to 18 months or 2 years. And then we check the debt service ratio. If they can't afford it, then we say you have to ask for a lesser amount. And those one normally goes through. So we do go back and forth with them and seeing what exactly they can afford and what they can't. I mean, the last thing we want to do is get all our investors to lend to a company that goes bankrupt in 6 months. That doesn't look good for us. Our default rates go up, and then people won't come onto our platform.
Sure.
So all our default rates under Securities Commission, we must show. So every single platform operator has a default rate. Ours, thankfully, is still quite low at 1.13%. The default rate for P2P financing in the market ranges from 0% all the way up to 13%. So that's quite a big range.
Okay. Yeah, it's certainly on the lower end of it. At 1.13%. That's better than many banks out there, actually.
Yes, exactly. Yeah.
Okay, perfect. So that navigate me through the process. You initially had the conventional license. You ended up getting the Shariah license, which ended up kind of catapulting you forward. So tell me a little bit about how you ended up incrementing new products into it, and what was the decision on adding those additional services?
Yeah. So the Shariah-compliant part was always in the forefront of my mind. Because I thought there was only one Shariah-compliant P2P financing operator in when we will go live in 2019, and they weren't doing that much. So I was like, there's a huge gap. And I mean, Malaysia is, in terms of global markets and capital markets, with number one player in Sukuk. I was like, why is there no one doing Shariah-compliant except for us when we applied? So we applied, and because we were the only one that was active, we were invited on several talks with several webinars, etc. And people were seeing microLEAP as the number one Shariah-compliant P2P financing operator in Malaysia. Having said that, 2022, we now have 7 Shariah-compliant P2P operators.
Success brings competition, yeah?
Exactly, yeah. So now from 2 in 2022, 7 out of the 11 are now Shariah-compliant. So everyone so Shariah-compliant is being commoditized now. It's a given. So from that, you have to see that what is it that's going to make you rise above the others? Is it going to be your service, your technology? And that's what us and everyone else is now fighting for. So we always look at the gaps in the market of what we want to do. And Shariah-compliant was a gap when we first started. And then when we looked at invoice financing, we were like, what is it that the investors want? They always want short-term investments. The shorter, all our short-term notes get filled up very, very quickly. Longer term, the 18 months, 2 years, will take several weeks longer. So we looked at the market, and everyone was doing invoice financing, especially the P2P markets. Mostly is invoice financing. Not many were doing Shariah-compliant invoice financing, so that's something that we launched as well.
Okay. So for those that may not be familiar with invoice financing or Shariah-compliant invoice financing, can you just explain it to its most basic components of what that entails?
Yeah. So basically, it's financing an invoice. So for example, normally when you supply something to your client, or for example, you Coca-Cola is your client and you deliver the bottles up and down the country, Coca-Cola won't pay you for 3 months. but you need that money now. So what do? You bring that invoice to a P2P financing operator such as ours or any other factoring company or invoice financing company. They will normally finance 80% of the invoice now. And then in 3 months' time, when Coca-Cola pays, the financing is done.
Okay, perfect. So, this begs the question that as you're building out this additional service, how are you extending your credit model into analyzing this? Because I imagine you now have the person who has the obligation to pay your actual borrower. So you have what, 2 tiers of different due diligence that you have to go through?
Yeah, exactly. So the borrower is one level. That's who requested the financing. And the paymaster, we call it, the ultimate paymaster, who pays at the end, is the one we also have to credit check. So our model has for invoice financing has 2 layers: the applicant or borrower and the paymaster. So it's a bit more expensive, but that's what has to be done, especially if that ultimate paymaster is an importer in, say, South Korea, for example.
Sure.
So one of our most successful ones is actually they export rubber gloves to South Korea, America, to a company that has all these operations over there. So getting that credit report from South Korea and America is always very expensive, but it has to be done, and that's what we have to rebuild into our model.
Okay. And so you offer the service for when the paymaster is an international client. Is that a common scenario, or is that more on the less common?
It's quite common now. It depends how much work a invoice financing company wants, or a factoring company. But a lot of so we have one repeat customer that's always borrowing from us. They like the speed of our financing, which is why they for us rather than banks. Banks take 3 months. We can take 2 weeks to do it.
Sure.
So it's been pretty good. So yes. So those I'd say about 80% of them are exporters, actually, for the invoice financing on our platform.
Okay. I'd have to imagine if a bank is going to take 3 months, the invoice may be paid by the time you end up getting the document signed, unless they're willing to set up some sort of revolving facility, which I imagine is probably much longer of a time period.
Exactly. I think it's the first credit checking take 3 months. Hopefully after that, but yeah.
And so you mentioned that the typical is to do 80% of whatever that receivable, whatever that invoice is. Is that kind of ratcheted up and down depending upon what the perceived risk comes out at? Do you go lower and say, hey, I'll lend you 40% of that invoice? Or is it fixed?
So it's normally fixed at 80%. We don't do more than that. If it goes lower, it's a case by case basis, really. But we always stick it at 80%.
Okay, but that's the rule of thumb. 80% is what it comes out at. Yeah.
That's right.
Okay.
That's right.
Okay. Very, very cool. And any other features that you guys have come out with based upon what your customers have been asking for? Yeah.
That's it at the moment. We are looking to launch a new product called microLEAP social financing. So it's going to be kind of donation based lending into micro enterprises and Islamic charities that kind of need this kind of business financing. So instead of like how microLEAP works, you lend or invest in a company, you get your profit rate back. This time you're looking at impact or social impact returns rather than monetary returns. So our platform will soon be looking at measuring the impact of your donation and how it helps them really grow. So we're building that at the moment. So hopefully that goes live in April or May.
And let me ask you on that one, because with the invoice financing, it was quite clear that the push towards getting into that was investor demand for shorter duration financing products. When it comes to this, is it the same investor demand that's driving this product innovation as well?
No, this is a bit different. The social financing is actually the borrower demand.
Wow. Okay.
So yeah, we've spoken to charities and some foundations, the Yaya Sons in
Mm-hmm.
Malaysia, and they said, yeah, there's something new that will really help us, especially when they have a whole small kind of micro enterprises or even nano enterprises that want anywhere up to 20,000 ringgit just to start their business kind of
Mm-hmm.
thing. And they are um, encouraged to pay back the financing, but because it's a donation, it's not as strict. If they don't pay back, we know that we're not going to chase them and put them on our credit bureau saying they haven't paid back. But
Sure.
we want them to pay back, because what happens when they pay back into this platform, it doesn't go back to the donor. It gets relent to other beneficiaries.
Mm-hmm.
So it kind of perpetuates the Islamic concept of charity, was what we're trying to do with this platform.
Okay. Okay. And have you started gauging the investor demand for being and putting capital in this type of donation?
Yeah, so we're starting to look around. Obviously we want to tie up with banks who have this kind of social financing push that Bank Negara wants them to do.
Mm-hmm.
So we hopefully they will be one of the biggest institutional donators or funders on the platform.
Okay.
And then we look at high net worth individuals and corporates who have a CSR push,
Sure.
is how we want to target our investor or donor base.
Okay. Let me ask you a question. This is perhaps this is coming as a foreigner, not knowing the intricacies of the tax law. But
Yeah.
is there tax benefit of giving donations as well, where I can deduct that against my balance at the end of the year?
And so what it has as a platform, we are in the process of applying for it, but doesn't mean we'll get it.
Mm.
Other what the only time you can get it kind of tax deductible is if the end borrower, say the charity organization, they have a tax deductible piece of paper. Then the donations on our platform will be tax deductible against your taxes.
Okay. Okay. But that sounds like a bit of a challenging process to go through to actually
Exactly,
be
exactly.
be
Yeah.
able to do it.
Yes,
Okay.
exactly.
Okay.
Yeah.
And what one other thing, if I'm not mistaken, you offer micro insurance on your platform as well. How did that come about as an offering?
Yeah, so when we first started microLEAP, we didn't want to just be the ones who just gives credit or gives that loan, and that's the end of it. What we do is, one, we provide free personal accident insurance up to 50,000 ringgit. So
Hmm.
every single microfinancing entity that gets financed through our platform gets this free personal accident insurance. And for many, it's their first actual insurance product that they've ever had. So
Hmm.
we want to kind of push insurance to all these kind of micro enterprises and small businesses. But two, we also do training, online video training. So for every single financing, for every single microfinancing, they get video tutorials on basic debt management, bookkeeping, what is P2P. These are all online videos which they have to pass for them to get the funds. So not only so that people see us as not just a lending platform, we're increasing microinsurance,
Hmm.
increasing financial literacy, and doing it in a Shariah-compliant way. So that's kind of our ethos.
Very cool. Very cool. And do you have an insurance partner that enables you to be able to offer that product?
Yeah, so we looked around and we found one insurance company that could do that's kind of micro insurance.
Hmm.
It was hard to find. There's only one at that time, only one insurance partner that was doing it. But thankfully through them, we were able to do this at something that was affordable, that we can absorb that cost.
Okay. Okay. Okay, very interesting. And so as you're building this all up, let me ask you on the team side, what are the how does the team structure in your organization? How heavy is the credit side versus the tech side?
So the tech side, we have our CTO, and he has the company that built the platform. So it's not exactly in-house tech
Hmm.
per se. But we do have the owner is our CTO, but it's not part of microLEAP. So whenever we do want things done, we do have to pay for it. Change requests, etc., etc. But having him as our CTO makes it quicker. So turnaround time is quicker than it would be if we just completely outsourced it. But won't be as quick as if it was in-house. So the techs, he has a team of 8 people under him. So on microLEAP's book, it's just one person. On the ops side, we have a team of 4 who does operations. And one person does credit is on the credit side. Another person is on collections. And then we have our C-suite. So all in all, it's about 13 of us in terms of manpower.
Okay, pretty slim team, yeah?
Yeah. Slim and really leveraging on technology as much as possible.
Yeah, absolutely. And within your ops team, for those folks, they come from a traditional banking background, or how did you get them familiar with the space?
Yeah, majority of them comes from a kind of trustee and investment management background. And then others are people who brand new kind of graduates who want to try something new. Nothing in fintech or technology, but just wanted something new. So and they were very keen to embed. But the majority of them were from asset management operations background and trustee background.
Okay. And so when you look forward, the Shariah-compliant market is quite big in Malaysia, obviously, but outside of Malaysia, there's a very large market as well. How do you view that when you're thinking about microLEAP and what the future holds?
Yeah, so obviously we look at places that that has the same kind of Shariah philosophy as ours. We use commodity murabaha to make our Shariah-compliant loans Shariah-compliant. Certain countries may not see that as an actual tool to be used. For example, Saudi Arabia doesn't exactly like commodity murabaha, but other countries do. So when we look around of where we want to expand, that's one of the things we want to know is how easily can we replicate what we are doing now to the next place. So we are looking around and see where we would fit.
I think that will be something interesting for the people that are listening in, that it's not necessarily a one size fits all, that Shariah compliant can mean different things in different places. Yeah.
Correct. Very, very true.
Is the difference dramatic, or is it kind of finer details? Just out of curiosity.
It's finer details, and it's just how you would have to set up your operations and how you do the actual financing. So there are other ways to make it Shariah compliant. The easiest way is always commodity murabaha, but there's always profit sharing in terms of if they're making a loss, they don't have to pay back the funds. But if they're making profit, then only they start paying the funds. It's a harder pill to swallow for many of the lenders, who lend something and then this year they're not going to get paid, but next year they will. So it's kind of hard to really find the right base.
Yeah, I've never been on that side, but I've been in enough financing and accounting tables to where I know how people can manipulate the numbers in order to show that there's no profit if they wanted to show that there's no profit. So that seems like that could be a little bit of a slippery slope when it comes to the trust factor and the credit scoring.
Very true. Very true.
Okay, but for so for the foreseeable future, are you focusing solely on the Malaysia market? Is that where you see the next stages of growth for you to remain?
So this year definitely focus on Malaysia, because Malaysia is still untapped. You see all the other P2P operators, majority are in the Klang Valley and just focus on Klang Valley.
Sure.
microLEAP was actually the first to have a borrower in each state of Malaysia, which I was like, wow, everyone's really focused on Klang Valley. So we want to really go up and down the country, which is why we want to expand in. We're trying to look for sales manager in like Penang, Sabah. We have one in Sarawak in Johor now. So we're pushing that along. But having said that, if there's an opportunistic deal that comes along, then yes. So right now we're in discussions with someone in Uzbekistan. So Uzbekistan is very raw and new, very high interest rates. The interest rates are 30% per annum for a loan, which is crazy.
Sure.
Malaysia, the maximum you can lend is 18% per annum, so there's a huge gap.
Yeah.
So they're in dire need of some kind of fintech platform that will help bring that down and make it easier for them to get financing. So we're looking at a joint venture in Uzbekistan. The guy was actually an ex-colleague of mine in a bank that I used to work. So that's how it all happened. So we're in the process of getting that launched. So hopefully by end of the year, microLEAP will have a JV partner in Uzbekistan. So that'll be our first, overseas foray, which is very exciting.
That would be very interesting. That would be very interesting. Once upon a time, a fund that I worked at, we had a fund domiciled in Uzbekistan. Did well, but we were never able to expatriate the money out of the country because of the capital control. So just something to watch out for, I guess, when you pursue that path.
Yeah. Thanks for that. Didn't even think about that.
yeah. That became a bit of an issue, and we had some like international financial institutions that had backroom pull and still nothing. Wow. But yeah, I think it sounds like a really interesting avenue. Just something to be cautious of if some of the Malaysian investors want to invest there. Perhaps there could be challenges in regards to pulling it back out.
Yeah. Okay.
Okay, very, very interesting. So is this going to entail you hopping on a plane and visiting the country?
Yeah, I mean, once we sign and we get further down, then we'll have a look. But yeah, so right now everything's been on like virtual calls and stuff like that.
Yeah.
So yeah, looking forward to going to Uzbekistan. Never been there, so
it's well worth the travel if you can. The old Silk Road, a lot of history, really interesting place to visit, and some good food as well.
Yeah.
So okay, very, very interesting, very interesting. So anyway, so focusing on Malaysia, you're talking about going across the country. You're in East Malaysia, getting in Penang, down in Johor. How much emphasis are you putting? Obviously, Penang, Johor, Klang Valley. These are like the commercial centers of the country. How much opportunity do you see out of kind of like the eastern coast area from Terengganu on down?
Yeah, so that's also another place that we were looking to do. So hopefully once we get someone in Penang, then that will cover the northern states. And we see more demand in Kelantan and Terengganu and Pahang, which we do have some borrowers out there. But I'm particularly looking for investors. Then we will get someone else to cover those kind of places. So it's part of our growth trajectory, which is what we're looking at, and we will soon have them as well.
Okay. Do you find that some of the investors are more interested in lending to borrowers that are near their home area, to where they feel a little bit more connection? I'm helping this individual that is in my neighboring town, that sort of thing.
Yeah, they some of them do feel that. That's why on our investment note, where it shows a little bit about the borrower, we always have a field which state they're from. We find in Malaysia that people are very proud of their state, and if someone is there, then they will definitely lend to those kind of local kind of state entities for sure.
And a lot of people in Klang Valley are not actually from Klang Valley, so they're from all over the place. If there was more coverage from some of these other places, who knows? It'd be interesting to see how the uptick is from the investors. Like, oh wow, finally you got more people from Pahang. I'm from same town, that sort of thing.
Exactly. Yeah, they definitely would love that.
Okay, very interesting. A bit of an open-ended question for you. How do you define success as an organization when you're operating towards a future goal? How do you define success as an organization?
For me, success is for microLEAP to be known a lot more throughout Malaysia and regionally, so people know that when they say microLEAP, that's P2P Shariah financing. Kind of having that kind of gravitas when you go to meetings. I'm microLEAP. So okay, you're that big P2P financing platform. So for us, it's to have our name known, that it's synonymous with our product. So microLEAP, you think Shariah-Compliant P2P financing. For that, it's like when you, like in Malaysia, when you ask for toothpaste, you never say toothpaste. You say, do you have any Colgate? So if I can be synonymous with Shariah-Compliant P2P financing, that'd be great. That will be ultimate success for me. So let's invest in microLEAP instead of P2P Shariah-Compliant P2P financing.
Yeah, and ends up being on both sides. Some high net worth individuals talking to each other. Why don't you just buy some microLEAP? You see some SMEs around. Oh, you need cash? Just get a microLEAP.
Exactly. That'd be the ultimate success for me. Yeah.
Perfect. This has been fantastic. But let me wrap up here with my standard closing questions that I ask everyone. And the first one is, what is a tech tool that you just cannot live without?
For me, the tech tool I'd say is our CRM tool. So we use HubSpot. One is free at the moment, so it's great.
At the moment.
And that just tells, at the moment, yeah, I don't know if they're going to change it. So you look at HubSpot and it tells you, who our sales managers have been speaking to, what the conversation is, and kind of things like that. So my son has decided to come in. So that is HubSpot for me is very key. So I know that people are doing their jobs around my network and our sales manager and our marketing people. So HubSpot is very key for me.
Okay. And last question here. If you were to talk to another startup founder that's just getting going, what would be the biggest piece of advice that you could offer?
For us, really get your product market fit well. Do your research beforehand, like who are your users? Like for us, we interviewed potential lenders and potential borrowers and see, does this platform something you really want? Once you build enough information, then only you start thinking of building your platform or getting into the business that you want. But always have that data in front of you before you make a decision, for me.
Okay, that's fantastic advice. Danny, thank you very much for being here. Really enjoyed this conversation with you.
Yeah, thank you.
All right, that wraps it up for another fantastic episode of The Sea of Startups. If you've enjoyed this episode, please share it with a friend. Go on to iTunes or wherever you get your podcasts and leave us a review. It's the best way for us to get discovered and to have these startup stories reach a broader audience. If you have any suggestions or would like to get in touch, you can email me at kevin@indelible.vc. As always, I'm your host, Kevin Brocklin from Indelible Ventures, and this is The Sea of Startups.